Okay, guys, in this episode, I am going to talk about what panda bonds are. These mysterious bonds issued in Chinese renminbi, the Chinese currency. I'm going to talk about Chinese investment in Morocco. It's getting bigger and bigger around the world. So, take a listen. Okay, guys, in this episode, I want to talk about these things called panda bonds. So, I've been reading a little bit about these things, and it was hard for me to understand at first, but I found some hopefully reliable information here. I have a background in economics, but I haven't really played around with the terminology in a long time. So, sometimes I get a little bit rusty. Compared to somebody who knows nothing, I know a decent amount, but compared to people in, finance or whatever, I don't know jack shit. So I am just working here, trying to improve my knowledge one day at a time. So what are panda bonds? I've been hearing about them. I've heard Europe's getting involved in them, but what are they? So I found what seems to be a good explanation. It says, the term panda bond refers to an indenture issued in China in Chinese renminbi by a foreign bank or corporation. Panda bonds are issued when a corporation wishes to raise capital from investors located in China. So, it goes on. Foreign corporations that wish to raise funds in the People's Republic of China have the option of issuing what are known as panda bonds. These bonds are sold by non-domestic entities, so that means a foreign country or a non-Chinese country or a non-Chinese company issues the bonds, which means that for example, if Walmart wants to do this, which they're not to my knowledge, but if Walmart wanted to do this, they would basically be borrowing money in renminbi, which is the Chinese domestic currency. So the bonds would be issued, which would basically mean that what happens is, and I don't know exactly how this transmission works, but Chinese investors would lend the money, domestic Chinese people and companies would lend the money to Walmart directly via their domestic currency, and it would be exchanged into the dollars, or in this case it would be euros, because it's going to be, this is mostly in Europe. So that's what they mean here. These bonds are sold by non-domestic entities, so non-Chinese entities, including corporations, institutions, and governments, and are issued in Chinese renminbi. This is typically done when the interest rates in China are low relative to foreign corporations' domestic rates, which lowers their interest expense. Since the bonds is issued in the People's Republic of China's domestic currency, investors located in China are also insulated from currency exchange rate risk. So I'm still researching the Chinese renminbi, how it works. There's two currencies, one onshore, one offshore, and somehow I don't know how they can make this investment internationally without being subject to exchange rate risk, but they are. It says foreign companies will issue, and the exchange rate risk, I could be wrong, but my intuition tells me the idea is that when you want to invest in another currency, or if you want to invest in a company that maybe you're using another currency, then you run the risk of your currency or the other currency appreciating or depreciating, so becoming more or less valuable, which could affect your return on your investment. So if you borrow money and the value of your investment, and say you borrow or you lend $100 and there's massive inflation and your $100 is now worth like virtually nothing on the exchange market, then I think that's the idea, is that if you lend out money at a certain exchange rate and the exchange rate changes too much, then you might lose your ability to be profitable. You may lose money if you have to, if your currency loses too much value. relative to the other currencies involved. So foreign companies will usually issue these securities if they have plans to establish operations in China. These bonds are also attractive to investors wishing to geographically diversify their portfolios. The giant panda is a bear native to South Central. Okay, yeah, we know that. So I also read a little blurb that these could be used for BRI projects. So this is very interesting. Basically, what it would allow... Okay, so let's back up here. Let's continue. Portugal. Portugal is... this is from... I guess this is from... Wow. From last month. Portugal to issue Panda Bonds in Eurozone first. Portugal plans to become the first Eurozone nation to issue so-called Panda Bonds, renminbi-denominated bonds issued by a non-Chinese entity, by raising some 240 million euros next week, the nation's finance minister said. One of the European countries most open to Chinese investment, Portugal, plans to place 2 billion renminbi or yuan of 3-year bonds, according to the finance ministry. So the objective of the issue is to enter a large market with strong liquidity, junior finance minister said. However, the amount of the Panda bonds issued is just a small proportion of the 16 billion euros in bonds that it will issue. Poland became the first European country to issue government bonds on the Chinese market in 2016. Portugal was forced to seek 78 billion euro international bailout in 2011 when rates on bond markets became too expensive for the nation to continue financing its debt. But it was able to return to debt markets even before the bailout program ended in 2014. So Portugal has had some issues in the past financing their bonds or issuing bonds, and which is borrowing money. That's what that means, borrowing money on the market. And it looks like now they're going to be engaged in borrowing money directly from the Chinese, domestic currency. So, and it said that Poland has done this already. And this is a very interesting development. So we've heard for a long time about the internationalization of the renminbi, the yuan, the Chinese currency. And I guess this is one way that you can get there, is by setting up these bond markets where people can borrow in your currency. And before you know it, maybe your currency is starting to be used around the world. Maybe it could start to be used in settling exchanges. So now there's a lot of questions around the stability and the strength of the Chinese currency, which could prevent it from succeeding in that goal. But this is really interesting. So Portugal's government is borrowing directly from China and using Chinese government bonds or Chinese bonds. These aren't, euro bonds that the Chinese are buying. This is renminbi-denominated bonds. Very interesting, very interesting. And I've read that basically these could be used to facilitate BRI projects, which are Belt and Road Initiative projects, which means that basically a country like Portugal could say, okay, we're going to issue, what was it, $2.4 billion $240 million. They're going to issue $240 million in bonds based in the Chinese currency. So basically you would have Chinese companies and investors giving Portugal's government money. Then Portugal may have to or might turn around and say, okay, so this 240 million euro, now we will pay the Chinese government to come in and build, or not the government, but Chinese companies to come in and build infrastructure. Right? So maybe they need roads, they need bridges, they need whatever, plants, something, railroads, I don't know what. So this is part of the idea. And so you kind of see how this circulates. The Chinese can lend money to the Portuguese with interest. So if the Portuguese are stable, they'll pay back the money to Chinese investors with interest. Plus, in addition to that, they are going to, the Chinese government and companies will be paid to create infrastructure in Portugal. So they'll be hiring Chinese companies, fueling Chinese workers, fueling the Chinese economy. This is a very good deal for China. I'm going to pause here and come back after the sponsors. Hey, everybody. Do you want to record your own podcast like me? Well, Anchor is a one-stop shop for recording, hosting, and distributing your podcast. Best of all, it's 100% free and ridiculously easy to use. And now, Anchor can match you with great sponsors who want to advertise on your podcast. That means you get paid to podcast right away. In fact, that's what I'm doing right now by reading this ad. That's right, mofos. It's easy. Check it out. Okay, so, I think that this is a very interesting strategy. It's probably just good foreign policy. And if they get more and more European countries on board, then essentially what it looks like is that it will facilitate, and I could be wrong, but it looks like it would facilitate an outflow of the Chinese domestic currency. But I'm not sure about that. I'm not exactly sure how that's going to work. But one thing it does for sure, or one thing that it looks like it does, is it fuels international China. It fuels Chinese investment overseas, and it will also mean that if people aren't careful, if countries and governments aren't careful, they will be indebted to the Chinese people or the Chinese government. Now, like I said, I don't think that's the primary purpose the Chinese do this, but I think it is a reason. I think the main reason is to keep their economy running. And to be honest, it's a good strategy. The Chinese strategy right now seems to be get involved in as many international projects as possible to keep the cash flowing. So the arithmetic from what I've been looking at, I can't fully wrap my head around it, but the arithmetic on the Chinese economy doesn't look that good. People talk about how the GDP is slowing, how the actual domestic currency is really, really weak. But it looks to me that if they can keep the cash flowing, if they can keep everything circulating without the bottom falling out, what I mean by that is without having a massive, massive increase in inflation, if they can keep everything running, they can keep the demand for their construction, the demand for their exports high enough, then I think they might be able to keep trucking on through. Now, let's take a look, do a little Belt and Road update here. So, an article from Belt and Road News. China, Morocco found Belt and Road Institute amid China's $11 billion investment. So, Morocco and China signed a $140 million agreement. 140 million Morocco dirham. I guess that's the Morocco currency, maybe. Agreement for technical economic cooperation to finance and bolster joint public projects. Since 2009, trade in Morocco has increased to $4.7 billion annually. As of 2016, China has significantly increased investments in Morocco with a joint statement on strategic bilateral partnership. China has pledged to support social and economic development in Morocco. It says that as of 2018, China stands as Morocco's third largest trading partner, of which $11 billion investment into a high-tech city has promised job creation for more than 100,000 locals in Morocco. So, this is, a lot of times you read about Belt and Road Initiative information, and it's a lot of talk but no action. Looks like there's some action going on here. And to give people a geographic lesson, Morocco is on the northwestern tip of Africa near Portugal and Spain, which is kind of interesting. We were just talking about Portugal. And so it's, in my opinion, this is interesting. It's just a continuation of what's going on with the Chinese Belt and Road Initiative. This is very smart foreign policy. So, Morocco is not going to make up for any dip in U.S. consumption. right? Morocco or Kenya or wherever the hell they're going in Africa is not going to make up for the United States market or for the European market if they had issues in Europe. But when you look at it from a long-term standpoint, putting one foot in front of the other, if you get a few $1 billion in trade here, a few $1 billion in trade there, you start building up little centers across the world where you're doing more and more trade. Well, neither one of those centers is going to be, a windfall profit, but it will add up over time. And I think that's what they're going for here. Long-term strategy, slow and steady, build partnerships, but also keep the money flowing in the short term. So it also should be noted Morocco's geography in relation to other parts of the world. It's near the Mediterranean. It's right next to Europe. So it kind of fits in with this whole how China's really getting heavily involved in that part of the world. So I think I'm going to go ahead and end that there. Just kind of give you an update on what's going on, give you some information on what Panda Bonds are, which could be a very interesting development in the future. Maybe, maybe not. We'll see. Like I said, I think we're undergoing a global shift. I don't think we're going to see China become the global hegemon. I just think we're going to see a fracturing in Western alliances. I think we're going to see a softening of people against China, possibly Russia, because they're kind of in a similar block, which will make the United States just weaker. It'll make our foreign policy weaker, and it'll make it more difficult for us to do things internationally. So just something to keep an eye out for. But that's all I got for today.